Well, I'm joined in studio by economics editor Tshepo Mongoai just to share some views on the latest decision by the Reserve Bank to cut interest rates by 25 basis points. Tshepo, so that's a cumulative 50 basis points that the Reserve Bank has given us over the last couple of months in September and now in November. We had some voxies, that is, members of the public speaking to SABC, telling us about what difference the 25 basis points had made to them. And according to them, not that much. But over time, if we continue to see this trend of rate cuts, presumably this is going to be quite good news for the consumer.
It will, but we know consumers need much more. The demand side of the economy has been really been under pressure for quite some times. You've seen with the retail's numbers that came out yesterday. That number is 0.9%. The expectation was around 2.8% from 3.3%. And you could tell that they are really under pressure. You had some, glimmer of hope in terms of the retail and the wholesale, which seems to be kind of doing well. But I think if we don't lift the retail side of the economy, we may find it difficult to achieve some of the economic growth that we're looking at. S&P came out with a 1.4 growth projection, and we know that during the MTBPS, they were talking about 1.8% in the next 3 years. And of course, the Reserve Bank today, they're talking about 2% that we may achieve, but we know consumers are not able to achieve. That retail sales number for the month of September, that's when we had the two-pot system, and everyone was quite upbeat that perhaps consumers will be going out to spend, and now everyone is saying, no, probably they have delayed their spending because of Black Friday, but we know that Black Friday is that much earlier.
But to be fair, with the initial kickoff of the two-pot system, people had to apply. True. And then it will have taken a number of weeks for them to get their money. So maybe they will have spent in October, and perhaps maybe some people are going to reserve their funds for November. And we know that some people are also likely to bring down their debt as well.
But that takes us away from that theory that two-pot was going to inject a lot of activity in the retail side of business. Some argument about paying off their debts, but we need a bit of lift in the economy, and the retail part of the economy is key in driving economic growth. And if that doesn't happen, it's a major concern. The other argument, of course, is around investment, that we really need this investment to come through in order to lift this economy. And I was quite interested in terms of what S&P actually said, that in their projection that 1.4%, they did not pencil in that investment coming through. They are quite skeptical about it. They also are concerned that we did not factor in the higher wage demand that may come through. Social spending, which will also come in higher, has not been fully factored in. That's why they're a bit more conservative in their outlook. So those are the areas where needs to be resuscitated, ensure that we bring more impetus and grow this economy. So a 50 basis point accumulative interest rate, I don't know, combined with the two-pot system, it looks like consumers are really going through a tough time, and some would have argued for a 50 basis point.
Absolutely, indeed. Speaking on investment, one of the things, of course, that has been lagging is the investment side. But we were speaking earlier to economists who seem to be a bit more optimistic about the future because of higher confidence levels. Is that the sense that you're getting, that perhaps we're going to do better going forward into 2025?
Absolutely. But it needs to be translated into real action. And that must also, we must see bricks and mortar. We must actually see action happening in terms of seeing and realizing that particular investment. And we also know that it's not going to be government that's driving that particular investment. Government is going to be relying on private capital to do that. And that private capital comes at a cost. It comes with conditions. And of course, the environment must must be suitable. Remember, these are businesses. It must make business sense. And if it doesn't make business sense, they will hold back on their investment. And of course, they've been on an investment strike for quite some time. The stakes are high for government to ensure that they incentivize the private sector to come to the party and invest. And sometimes at times they will have to put money on the table to ensure that there is a little bit more to encourage them in order to invest.
Yes.
And it's not just going to be a walk in the park.